So, hi everyone. Thanks for joining us on DEX Masterclass, Episode 1. My name's Aaron Mangal, and this is George Harrap, the CEO of Bitspark. My background is I'm a biz dev guy, a content marketing guy, and tech writer. So I've been covering the space for several years and have learned a lot about blockchains and crypto. As I've gone through that process, I've felt very passionate about myself learning, but also I think advancing that learning, not only for myself and others around me, but bringing people like George and their team to the table who are building on, they're building a DEX and they've built on BitShares and they have a lot of knowledge. So I've just had this thought of why don't we put some ideas together that are educational that can kind of bring people from point A to point B. So just to give everyone an idea of what to expect, we are creating a few episodes right now. We've got about 3 episodes in mind. That could change by the time we conduct filming, as things, we might be a little longer. But the idea is to take everyone through the basics of a DEX, specifically Sparkdex, that has been created by Bitspark, and really uncovering the meaning of trading in a decentralized manner, where the opportunities are. And this is going to be something where you don't have to have any prior knowledge of trading or decentralization or even crypto. We're going to really hold your hand and help build that foundation. And some of the things you're going to take away from the masterclass will be just fully understanding what a decentralized exchange is, understanding the relationship between blockchains and cryptocurrency exchanges, navigating Sparkdex itself, which Bitspark, like I said, has created, best trading strategies and investing strategies, a lot of the pairs and assets on there. There's specific pairs that have better liquidity than others. So that's an example of that. And then lastly, step by step, like how do you actually trade with these various strategies? And we're going to really define that. But as far as this episode goes, it's really meant to be more of a foundational, what is an exchange? What are centralized exchanges? What are decentralized exchanges? But before we get into that, George, I got to let you talk about yourself before I go off on the rabbit hole.
That's all right. Well, thank you very much for the intro there, Aaron. So my name is George. I'm the CEO and co-founder of a company called Bitspark. We're based in Hong Kong, and essentially we've been around the Bitcoin space for a good many years now, just over 5 years. We were the first company to do a cross-border remittance transaction using cryptocurrency. So the first to do Bitcoin remittances, really. That is cash in, cash out. And from that, we really got to learn a lot about pretty much everything about how money moves around the world. So, we were using many exchanges, many different mechanisms to move money, whether it be traditional or via crypto. And from that, we've essentially built out what Bitspark is now. And what Bitspark is now is essentially a cash in, cash out network for a number of different countries, a number of different currencies, all around the world, for people to be able to exchange their local currency for cryptocurrencies and be able to do that wherever they might be in the world. So a lot of that underlying infrastructure involves exchanges, particularly the DEX. And what we're going to be talking about, I think, during this podcast is a lot about the differences between traditional exchanges, differences between decentralized exchanges. And I can certainly share some experience about, we've been using a lot of exchanges for a long time. When we were doing a lot of remittances back in the day, we used to connect to like 11 different exchanges. And that became very messy for various reasons. So keeping it simple in a DEX, I think, is the best way to go, and we can expand upon that. But essentially, I want to keep it as a conversation, and be able to share what we've learned, and if you've got any questions, fire them away, and we'll go from there.
Yeah, everyone, as we talk, keep in mind this is sort of we're kind of building this as we go. We're trying a new format. I do a podcast, and podcasts are great to a degree where we can really have a nice interview. We're really trying to reflect that in this format, but I think what we're really trying to do here is have that sort of masterclass end result. And we're gonna, this one's starting off more, like you said, friendlier talk show style. But I think as we go down, it may feel a little bit more instructional. But like you said, I think we're going to aim to keep it kind of conversational. So when we say DEX, we mean decentralized exchange, but that also begs the question, what is a centralized exchange? So why don't we start there, George?
So the differentiation between a centralized and decentralized exchange, this is a totally new concept, really. I mean, the concept of a centralized exchange versus a decentralized has only been around for a few years. But what we're talking about when we're talking about a centralized exchange, it's like your NASDAQs of the world, right? So there is a company, the New York Stock Exchange, and they have an exchange. And what an exchange is it's a marketplace for people to be able to exchange one asset for another. And that might be people with US dollars and people with Apple shares, and they have to meet somewhere in order to exchange those two things. So the best way for them to meet is via an exchange. It keeps all of the different prices transparent. People will be able to see, what is the going price for an Apple share. And, this is something that I think was pioneered by the Dutch about 400 years ago, the concept of a fractional equity in a company. And that's generally when we're talking about exchanges, a lot of people think about trading shares, these sorts of things. And often the way that they do that is at some company, some location, the New York Stock Exchange, the Hong Kong Stock Exchange, the London FTSE 100, exchange and index. So, these are the places that people go, and these are the essentially the counterparties. So when I trade with somebody else via the New York Stock Exchange, well, certainly I'm not trading directly with somebody else. I'm actually going by this middleman called New York Stock Exchange, right? So the New York Stock Exchange has the Apple shares in custody, and they have the dollars in custody, essentially. And they are able to match those two requests together for, say, me, somebody with dollars, and you, somebody with shares, wanting to exchange them. So what they do is they provide order matching. And that's an interesting concept. So when we're taking this concept to cryptocurrency, and we're talking about centralized cryptocurrency exchanges, these are the middlemen that provide the matching between people who want to trade cryptocurrency for a national fiat currency or another cryptocurrency. So if I have Bitcoin and you have Litecoin, we need to meet somewhere in order to do that. And if we can't do it face to face, we're going to have to use some sort of company generally to post our orders there, to go, look, I'm willing to buy Bitcoin at X, and then you would say, I'm willing to sell Litecoin at Y, and be able to meet somewhere in the middle there. So that's the real job of what an exchange is. And in the traditional world, we're pretty much always talking about a centralized exchange, this one counterparty, this one company that has both the buyers and the sellers both on board, and essentially that counterparty is just being in the middle and essentially being able to match buyers and sellers together.
Right. And so when we think about like the New York Stock Exchange, or NASDAQ, it's very trusted. Everyone believes in it, for lack of a better term. What are some of the problems we've seen? Everyone kind of thinks, oh, it's regulated, it's squeaky clean. What are some of the things that take place with this very close centralized control of not only the order book, but even settlement, right? Like there's Seed and Company that Patrick Byrne talks about that, is known but not spoken about, but hey, this is crypto. So of course we always got to talk about that stuff. Can you tell us a little bit about what that world is like? Because it's, we're going to get into also centralized exchanges to include stuff like Binance, but centralized exchanges like New York Stock Exchange, there's so many layers of centralization that it's not even just the management of the trades, right? It's even like settlement itself amongst these Wall Street firms. Can you tell us sort of what that world's like and sort of how these pieces are sort of fitting together?
So certainly it's quite in depth when we're talking about something like a New York Stock Exchange. So if I want to trade on the New York Stock Exchange, there is no sort of website where I can go and sign up, and there is no bank account called New York Stock Exchange that I can go and send money to.
Right.
So what you have to do is you have to operate generally through intermediaries, brokers. And these brokers, and there's a limited amount of them, are the ones who are connected directly with the exchange. So even to begin with, before we even get started there, I am working through a broker, and then the broker is then working with the exchange, and then the exchange is then counterparty to another broker, who's then counterparty to the actual guy I'm buying and selling the stocks from. So there's quite a few intermediaries there. There's also the banks involved. So the broker has a bank account. If I go and send money to my broker, they have to get the money at the end of the day somehow to the guy that I just bought the shares from, right? So then those brokers need to be linked together. They need to, the settlement needs to happen between brokerages, between the New York Stock Exchange itself, and different banks along the way. There's a lot of different counterparties. And obviously throughout that chain, there's not really that much incentive for the banks to make it quicker, because the longer that the banks hold on to your money, even if it's 2 days, and there's this concept of T+2 in many exchanges around the world, where actual settlement takes generally 2 days to happen. So that is, the money going from me to the money going to the other end. And during those 2 days, that money is held by all of these different intermediaries along the way who are making fees. So, if they're transacting billions of dollars and they're custodying billions of dollars, every single day, then it's not really in their interest to offload that billions of dollars as quickly and as fast as possible. And also the current system is set up such that all of these different sort of brokerages that are in the middle between exchanges and it doesn't really, they have no interest in, allowing something along like a concept like a crypto exchange whereby there's a website called, New York Stock Exchange, and then people can just sign up, right? Because then there's no point for a broker anymore. So they're out of business at that point. So there's also sort of the concepts around competition as well. Starting a new exchange in many jurisdictions is illegal. Like there's just one exchange, which the government says that is our exchange, and to start a new one is almost impossible. So there's a lot of sort of issues when we're talking about centralized exchanges, whether it be in the different middlemen, the different fees that happen along the way, and just sort of the whole process seems a bit antiquated for the days where, everybody is used to downloading a mobile app or something like that and being able to press a few buttons and then, buy and sell whatever they want. So having to deal with two different middlemen along the way in order to do this seems like it doesn't really fit with today. But that is how things are in the traditional world. And certainly I think centralized crypto exchanges bring it to a little bit of the next level.
That's interesting. I never thought about how self-service of crypto exchanges is actually, that itself is a step up, right? Because it's kind of like with cloud computing. Amazon basically said self-serve. You sign up with AWS, you can provision your tech, and you don't have to go buy $10,000 server anymore, right? I never thought of that with the brokerage. I was actually more thinking of it from the standpoint of they're able to look at movements in the order book. Like they can, even I've heard of a commodities market shutting down the market if it goes too high. Like that just seems amazing. Like that you could just have a kill switch. Crypto, for better or worse, there is no kill switch. And we'll get into that a little bit. But yeah, I think that's a great point about self-service. And even though, as we'll learn, centralized crypto exchanges still control like your funds and stuff like that. But to your point, when all these funds are crossing hands, they're able to basically trade with that. Like, for example, when you put money in the bank, they do all kinds of weird stuff with our money, right? So I think that's another factor is like you said, there's no incentive to make it slow it or to make it faster because they're doing things with that money.
Yeah.
Right.
And another quick thing as well before I forget is like trading is not 24/7 on traditional exchanges. When it's Friday afternoon, 5 p.m., then that's it for the next 2 days in New York. And even though, maybe the rest of the world in a different time zone is trading, maybe something happens over the weekend, maybe the CEO of some company steps down and that's some big news and that could, affect the markets. Nothing's going to happen until it opens again on a Monday. Whereas crypto exchanges are 24/7, which is a huge differentiator there. There is no real downtime for crypto exchanges. So that, markets can react to in many different ways that people are not even still right now trying to understand. If something happens on the crypto markets on the weekend, things can get pretty crazy by the time it's Monday. Right. And it's already happened on the crypto market. So, and we see this. One quick anecdote is the CME, the futures exchange that trades Bitcoin futures. Bitcoin price can go down 10%, 15% over the weekend, but then the futures market doesn't open until a Monday. So if you're stuck on the CME on a Monday and you already know that the Bitcoin price is already down 10, 15%, then you're going to get margin called as soon as it comes online. Yeah, some crazy shenanigans can happen.
Well, yeah, just because it's like the 9 to 5, if you will, markets and 24/7 intertwining. I mean, that seems ripe for for opportunity, frankly, but also a lot of risk and that discrepancy, right? But now let's go a little bit into centralized exchanges. So again, elements of centralized exchanges: the order book is controlled by a centralized entity, your funds are controlled by a centralized entity, settlement, as you said, with brokers. Although with crypto, I'm depositing money into a wallet that someone else is managing. So yeah, let's go into that a little bit.
So the largest spot centralized exchange at the moment is Binance. And Binance, unlike the New York Stock Exchange, there's no need for a broker with Binance. So you go and sign up to an account with Binance, and then you are trading with one counterparty, which is Binance, essentially, who is that order matcher, the guy in the middle that's linking you with the other guy who is, buying or selling at the other end. So it simplifies things a little bit easier. Your funds are controlled by Binance. So that's another thing to consider. So trust is a key component, especially in the crypto world where all money is digital and there's the potential for a hack or something like that to happen. And then maybe you lose your money. And there's nothing really you can do at that point. So the trust in that counterparty, the trust in somebody like a Binance is very important. And obviously as a company, they have to make sure that they are able to prove to their customers that they are a good custodian of the money. So that's another thing. I guess another point is that generally in crypto, unlike a bank, you don't earn money on your reserves. There's no interest in Bitcoin. So if you have 1 million Bitcoin deposited into the exchange can't earn interest on that 1 million Bitcoin. It's in their interest to make sure that Bitcoin is there if customers need it. The more transparency they can provide around that, the better. But yeah, for centralized exchanges, it all comes down to trust. They are generally quite fast compared with other options. Not as fast as the traditional world, because there was an interesting blog post by BitMEX a while back whereby they were comparing, why is it that when we're talking New York Stock Exchange, there's people like installing servers right next to the stock exchange server itself to get faster trades by a nanosecond or something like that? Well, in the case of New York Stock Exchange, they're only serving the brokers directly. So the number of people that they have to serve their exchange software and API and everything to is very limited. In the case of Binance, it's literally anybody in the world with a computer. So if you have a computer, you are directly connected to the central, brain hub of Binance. So being able to serve millions of connections, in the case of BitMEX or Binance or something like that, is a lot more difficult than just having to serve, just a couple that you can count on your hands. So yeah, that's another thing to consider. But generally, this is where the most liquidity is in the crypto markets, is on centralized exchanges. And it's generally the ease of use it's pretty easy. A username and a password and an email address is generally all you need to get started. And then you can get started trading. So they try and keep the experience easy for customers. They try and enable anybody in the world to be able to sign up. You don't have to manage your keys. You don't have to learn complicated, wallet stuff. But that's essentially the trust element is there. And I saw an article a while back, 30% of exchanges have been hacked throughout their lifetime. So, the track record is not very good for centralized crypto exchanges, but, hopefully that's getting better over time.
Yeah, that's funny the way you put it, serving a few versus serving many. So yeah, like anyone can sign up. It's self-serve, anyone from any country. Now they're sort of starting to become more of a regulatory sort of burden being placed on them, but it is quite amazing that just how anyone can sign up for Gmail, a Gmail account can basically be trading crypto. It's that sticky, it's that easy, it's that quick. It's pretty wild. So that's centralized exchange now. So centralized exchanges, again, they control, even with crypto, they're still maintaining this order book themselves. They're maintaining wallets. So there's almost like there's new challenges or even risks, you could argue, being created because of the fact that they're now having to recreate what was already built into this financial system that everyone was probably using somewhat off the shelf, probably from, whoever the highest people in banking are. They just take those parameters and use them. Whereas with crypto, they've had to somewhat build their own infrastructure. And like you said, about because it's so new, I think that's why there is these kind of opportunities for hacking and stuff like that. But at the same time, there is the burden for them to make good, even if something bad happens. They have to, like I think Bitfinex, if I'm not mistaken, got hacked and basically paid everyone back. So that built a lot of trust, because even though they screwed up and had some holes, which frankly is to be expected, you kind of can't. I think it's to be honest with you, I think it's naive. And again, there might be some new people on here. It's a little bit naive to just expect it to be perfect and secure right out the gates. That's what we've learned, right? So this kind of brings to the table, okay, decentralized exchange. So there's some virtues there. You may have heard not your keys. Was it not your keys, not your crypto? That was Trace Mayer did a campaign about that, where he was basically reminding people with some of these new hacks that came out. If you're storing crypto on a centralized exchange, and as cool as Binance is and how great of a service they provide, at the end of the day, your funds are on their servers, their wallets, not yours. So decentralized exchanges are preserving that virtue of you own your own keys, you own your own crypto. So tell us a little bit about DEXs.
Decentralized exchange, as you say, is essentially there's no counterparty in the middle. That's the big difference. So if I have a wallet and you have a wallet, then surely our wallets should be able to talk directly to each other, soft on the software level. And I could say, hey, I've got some Bitcoin and you've got some Litecoin, and we would like to establish a price somehow. So I would post it to my wallet and you would post it to your wallet. That's essentially the concept of a decentralized exchange. So instead of both of us having to establish a price and tell some other guy, what we want to do, and give some other guy our money, we already have our money in our wallet. And it's just our wallets are talking to each other. And they're saying, I would like to exchange at this price. You're saying, I want to exchange at this price. And then when we agree on a price, that is swapped wallet to wallet. So essentially that is what a decentralized exchange is. So in the case of DEXs, they've really been around again for about 5 years now. BitShares was the first DEX to really come online to about 5 years ago. And it was pretty much ahead of its time. I think it still is. And since then, we've seen a lot of different decentralized exchanges come up. There's quite a few on Ethereum. So that is the blockchain of which they are using. A lot of people might go, well, what's the difference, right? Like, why should I care what blockchain a DEX is on? That's a good question. And I think that there's a lot of technical reasons, but generally it depends on, the coin listings. So, what coins are on there, who gets to decide, what coins are on there. Does anybody decide? If it's on some different blockchain, well, how does that blockchain work, right? Is it somehow centralized? Is it somehow decentralized? Does it have mining? These sorts of things. So there's a lot of questions that you've got to consider. But I think we can talk about some of the sort of larger DEXs, and in the case of BitShares, it's a very fast exchange. So you can, I think the tested transactions per second was something like 3,300 on BitShares, but it can go up to 100,000 a second. So you can do a lot of stuff, basically. And an exchange is something that needs to interact very quickly. If you're waiting, 10 minutes to post an order, then that's not very good, right? Because the price can change very quickly. So speed is an important thing for a DEX. Another thing is, essentially, do you have custody of your money? That is the important thing, right? So again, in the case of BitShares, that the keys are, when you go and make an account on BitShares, the keys are in your wallet. And, even if you lose those keys, then you've lost your money, just like you've lost your wallet. If I leave it on a park bench and my wallet is on the park bench and I walk away, I've just lost my money because it was in my wallet, right? So you've got to be able to undertake some security precautions there. So kind of buyer beware in that case. But there's no limitation on what you can trade. So in the case of Binance, what generally happens is that some new coin comes along, they pay a bunch of money to the exchange. The exchange, decides if they want to list it or not, and then so there's a barrier to entry there, right? But on a DEX, you can trade anything for anything because there is no central party that's telling you what you can and can't do. So the barrier to entry is very low. So if you are a new project, some new company with a new idea, you can just go and do it and, start an exchange market, and you don't have to ask anyone. There's no permission. It's permissionless. That's great. And you can get up and running very quickly. So that is very important. And certainly BitShares manages all of these different concepts pretty well. In the case of Ethereum, there's a couple of different exchanges, and they're sort of run by various companies and centralized parties. And we've seen some examples where even though you might say you're a decentralized exchange, you're not really. So Bancor was a good example of that. Bancor, there was some security hurdle with what they did, and then they just stopped their exchange. So they had the power to stop things. And if the fundamental principle is that if any one entity has the power to just stop the entire exchange, then it's not decentralized. And Binance have just bought out their own DEX as well. But in the case of BitShares, nobody can stop you. There is no one entity that can just stop you doing whatever you want. And that's what really gives it the value is that you don't have to ask permission. Nobody can take your money from you. Nobody can freeze it. And essentially it's up to you, and it's up to the size of the network. So yeah, I think that there's a lot of very good things that are happening in decentralized exchanges. And certainly when we're talking about trading cryptocurrency for another cryptocurrency, there's no need for a bank in that equation, right? So there's no need for somebody to receive dollars somewhere and do something. It can all be digitized. And some of the biggest exchanges around the world now are just entirely crypto to crypto. So I think that is very, very exciting, whereby that world certainly makes sense to be using a DEX for, because then you avert this whole risk of the exchange getting hacked and losing your money. And that is a huge risk. So I think that certainly DEXs are over the years have been gaining prominence. They've been gaining more features, proper charting tools, and a lot of really cool stuff which is coming down the pipeline.
Yeah, and I think I'm glad you mentioned buyer beware, because I think it's so easy to paint this overly rosy, optimistic picture of crypto. So like you said, if you lose so this is kind of the other side of not your keys, not your crypto is, well, if you lose your keys, also not your crypto, right?
Yeah.
So that's sort of the, I like that you said buyer beware. So DEXs are kind of like a very, you're taking the responsibility on yourself. I would also add that fluidity of with BitShares in particular, you can trade any pair against any pair that exists in BitShares. Now that's a little bit scary because the combinations are fairly unlimited. Now I will say it doesn't mean that there will be liquidity amongst those pairs, but it kind of makes you wonder and kind of blows your mind of how much activity could be happening on a DEX with the liquidity that we're seeing on other exchanges in a DEX. It could be quite staggering because of the fact that anyone can kind of cross anywhere. And then that's not even taking into account atomic swaps, which is cross blockchain trades. That's kind of beyond the scope of this discussion, but I'm just kind of painting the picture of potential of what can happen on a DEX, right? And I think in a future episode, we'll talk with you all more about, market pegged assets, user issued assets. On the one hand, there can be a lot of what coins, right? But at the same time, because anyone can issue those coins, right? So that's sort of the other side of, okay, low liquidity, anyone can release some dumb coin. But then on the other hand, people that are playing it right, and markets that have more liquidity, that's kind of a dream. It's not controlled. It's not maintained by a central authority. And again, that's something we'll get into in another episode about BitShares and the construction of BitShares. It's similar to, it's sort of like there's custodians or board members that sort of run these nodes that maintain BitShares and process transactions and maintain price feeds. But again, just to kind of add a little bit of context there. So there's sort of custodians of the network, but those custodians aren't maintaining the order book, right? That order book is kind of maintaining itself. It sounds really strange to say, but the order book is reflecting as you said, someone bought crypto, put it in their account that they own. The BitShares blockchain is only reflecting that, right?
Yeah, I mean, the order book is the blockchain, essentially, in the case of BitShares. So, in the case of, there's been some instances for other centralized crypto exchanges that there's been shenanigans happen in the order books and people have blamed the exchanges. They've said the exchanges are trading against them or undercutting their orders or closing them out at margin at different things and all sorts of different things, right? Which, look, if it's a centralized exchange, they control the database. They can do whatever they want, right? So in the case of a DEX, everything is public. It's it's on the blockchain, right? So you can prove mathematically, and everything is public on day one. You can see what is actually happening behind the scenes. So you can't fake anything, and you can't reverse anything. And that is a really big bonus point there, is that even like when we talk about sort of some exchanges that have closed down or they shut down different markets and these different things, essentially they're just denying you access to the database of which they have. And maybe you have money on there, right? And you just can't get it anymore. Well, in the case of BitShares, you can always get your money because you are the custodian of it. And there is no one database which rules them all. The blockchain of which you're interacting with is what maintains that whole order book. So yeah, all of the transactions which are happening are essentially order book posts. People saying, I will buy X coin for X price.
Right.
Y price. So yeah, so that's a key concept as well.
And I think this is a great segue into Sparkdex, which you all created. And it's important to just make a quick note. DEXs are, specifically BitShares, you can go on GitHub, you can look at the code base, and a lot of people have and do. And lots of people have created other decentralized exchanges on BitShares. Some people sort of are still working within the BitShares ecosystem. Other people are trying to sort of fork it all together or clone it. You all have worked within the BitShares ecosystem. So tell us a little bit about Sparkdex and tell us how you've used what's there with BitShares and maybe some improvements you've made, because now that because of your business, and we'll get a little more into that as how it relates to a DEX, you have some very interesting, I would argue, somewhat services, but even assets to bring to the market that are beyond if you were just using a BitShares DEX.
Because this blockchain is the thing which is out there, it's running, it's maintaining the order books, and nobody can influence that. The question is, how do you view that, for the everyday person, right? What are they going to do? What are they going to type into their browser to get that, right? Now, there's a couple of ways that they could do that. They could download the default BitShares wallet on GitHub, and then they would just be running the stock standard wallet, which has a bunch of different functions, and take it or leave it. That's great. That's open source, and anybody can look at that. But what we thought, and what many other companies think is, well, can we make this window into what is happening behind the scenes? Can we make that easier, or make it better to onboard new customers and these sorts of things? We can't fundamentally change anything about how the blockchain is working, the order books or the execution or anything like that. It's not possible.
Right.
What we can do is we can make a pretty window for you to be able to visualize what you're seeing. And essentially that's what Sparkdex is. Sparkdex is a window into the BitShares blockchain. And from that, of course, the question is, we as a company would like to list various assets, different coins that are relevant to us, right? So if we want to enable people to trade these coins, the best way is to add them to our window in the case of Sparkdex. So we have some assets of which we list ourselves. So we're the counterparty essentially for those assets, but you can trade those assets on this decentralized window and in your own wallet and with your own keys and all that kind of stuff. And even if we disappeared tomorrow, if we, something horrible happened, you would still have access to your money. You'd still be able to do everything. I can't take any money from anybody. So that is a very core concept. So the first thing about Sparkdex is it's a window into the BitShares blockchain. And the second thing is that we have, with that window, added some of our own currencies which we think would add value to our customers. So some of them might be the local national currencies which we deal with, where it's Hong Kong dollar, Australian dollar, US dollar, that are connected to the rest of our system. You can trade those coins in Sparkdex. And you can trade, other coins, Zeph, BitShares coins, BitUSD, BitCMY, BitShares itself, anything, any of the tens of thousands of different coins on the blockchain you can trade. So yeah, that's a little bit about Sparkdex, and what we're trying to do is make this whole concept of having custody of your own money and being able to trade yourself without a counterparty, and bring that to as many people as possible. And that's what we're trying to do.
Yeah, and in future episodes, we're going to talk about, like you have your own stable coin and some of these pairs. So essentially, you're not running like a new DEX or anything like that. You're tapping into what was already BitShares, right? But you guys, you said, added a window, kind of like your own branding and UI. And essentially, you're able to give people like better access to some of your stuff, right? And you guys like have for example, like a Bitcoin IOU. There's other gateway services that provide that, but you all have, so essentially you can deposit your Bitcoin into Sparkdex, and the gateway, I think, isn't necessarily restricted to the Sparkdex itself, right? But you're also sort of doing some value adds is what I'm trying to get at, so that your fees are significantly better than these other gateways. You can just compare them side by side, do flip down, look at the fee of what it's showing. It will be pretty clear if there's a better price, right? So.
So when we were looking for a decentralized exchange for the company to essentially make use of and integrate into our infrastructure, there was a couple of choices, right? There's a lot of projects which go along the lines of, oh, we're going to go and make our own, right? We're going to roll our own and do this kind of thing. And the problem with that is that generally, you've got to sort out liquidity, right? Who's going to trade? Who's going to put money into your exchange, right? And that is a big road. And obviously that is the first hurdle that people stumble at, is if nobody's willing to put any money into it, then it's not worth anything, right? That's the first thing. The second thing is security as well. So, let's say you're building your own. Well, how do you know that is secure? It hasn't been battle tested. It hasn't been out in the market for years. Is there any documentation? Another thing is how easy is it to build on? Are you going to have to go and build all the documentation, all the tools, everything else yourself? And these are some really fundamental steps which are huge to really overcome. So what we saw is that, instead of trying to reinvent the wheel, let's look at what works. Now, BitShares, oldest running DEX. Great. Okay, that's a good tick. It's been around. It's been battle tested. It's been out in the market. People have been trying to hack it for years. All these sorts of things. So that's one thing, is that it actually works. The second thing is that there's documentation that exists. So as a company, we are looking for the best way to serve our customers. So we're not partial to. We don't care how the technology that we use. We're not partial to one or the other. It's like, well, what solves the job? What gets the job done, right? What solves the problem for our customers? So a part of that is the documentation there? Are the tools there? Is there existing liquidity? Are people willing to exchange on this system? And does the system do what we need as a company to integrate into our infrastructure? So that's another core concept as well. So a lot of the decision making around why we decided Sparkdex was that this was really the best course of action, was to build upon what BitShares had already brought to market, had already got running there. Liquidity was already there, security, documentation, all these sorts of things. And to really just say, well, look, this already works. We're not going to try and reinvent the wheel here. Let's just try and improve upon this experience and be able to bring this existing tech to as many people as possible.
Yeah, and so I think there's the question of if it's got your, it's got Sparkdex, so it's got your company name on it. You're basically just tapping into sort of what's already there. You're not like creating a new DEX, a new blockchain, a new construct. You're tapping into what's already there, and like you're just like we kind of said, a second ago, providing sort of that preferred access or window, right? I mean, that's pretty much how it works, right? So
yeah, absolutely. And that means that it's interoperable with other BitShares enabled DEXs, exchanges. So it just makes it a lot easier to be able to connect with the rest of the world.
So what we're going to go over in the next, I think, episode is we're going to talk more about BitShares itself, because we alluded to it, and BitShares really does require kind of like its own explanation. We're going to talk about gateways, which are basically somewhat like exchanges within BitShares, and you might be thinking, well, why are there sort of exchanges within BitShares? And we'll get into that, but it's kind of like a swap, right? Like you're kind of swapping me out one coin to another, and you're doing it right away. So you're never actually like storing it for me the way it works with Binance. It's more of a swap. So that's something we'll talk about: gateways, user issued assets, UIAs, market pegged assets. You all have a stable coin that we'll get into in the next episode. It's a really interesting time, and we'll look forward to picking up next time with everyone and continuing the Master the DEX Masterclass. So thanks, everyone.
See you later, everyone.